Hey traders! In this video, we're going to learn a simple but powerful strategy that helps you spot real breakouts and confirm the momentum behind the move, so you can enter with confidence. I'll walk you through everything step by step, from setting up your chart using the indicators to entering trades based on clear rules. We'll use a real chart example on gold XAU-USD in the 15-minute time frame, so stick around till the end. Let's start with our first tool, which helps us detect key support and resistance levels. On TradingView, click on the Indicators button. In the search bar, type Swing High Low Support and Resistance. Click the result to add it to your chart. You should now see dotted lines, red for swing highs or resistance lines, and green for swing lows or support lines. Now let's fine-tune the settings. Click the gear icon next to the indicator name. In the Inputs tab, set Swing High Strength to 14, set Swing Low Strength to 14. Make sure Swing High Source is set to High and Swing Low Source is set to Low. Now that we have added the indicator to our chart and set it up correctly, it's time to learn how to actually use it. Resistance lines are levels where the price hasn't been able to go higher in the past. They act like a ceiling, stopping price from rising. So if the price breaks above one of these resistance lines, that's a signal the price has the potential to go much higher, and we could look for buy opportunities at those breakout points. But if the price fails to break above the resistance, we'll likely see a price drop, and that gives us a chance to take sell trades. For example, here you can see the price failed to break this resistance level and then made a pretty strong drop. Or in this spot, the price managed to break through the resistance level, and we could have entered a buy trade and cut a solid move up for a good profit. Support levels work the opposite way. These are areas where the price stopped falling in the past, acting like a floor to prevent further drops. So if the price doesn't break below the support level, we'll likely see it bounce back up, giving us a chance to go long. But if the price breaks below the support line, it often means more downside is coming, and we can use that as an opportunity to enter a sell trade and grab some profits. Now that we have learned how to use this indicator, it's time to take things to the next level by adding a second indicator to our chart. This will help us increase our accuracy and win rate. This second tool helps us confirm whether the market has enough momentum to push forward after a breakout. Go to the indicator section again and type Squeeze Momentum Indicator. Click it to add it to your chart. Now click the gear icon to open its settings. In the Inputs tab, set BB length to 20, set BB multiplier to 2, set KC length to 145, set KC multiplier to 1.5. Make sure the option Use True Range KC is checked. Now go to the Style tab and update the colors. Color 0, green, strong bullish momentum. Color 1, white, weakening bullish. Color 2, red, strong bearish momentum. Color 3, white, weakening bearish. And that's it. Now you're fully set up to start trading this strategy. Entry rules. Buy setup. Wait for price to break above a red resistance line. Confirm with green bars on the squeeze momentum indicator above the 0 line. Enter the trade at the close of the breakout candle. Place your stop loss just below the recent swing low. Set your take profit at 2 times the size of your stop loss. 1 to 2 risk to reward. Sell setup. Wait for price to break below a green support line. Confirm with red bars on the squeeze momentum indicator below 0. Enter at the close of the breakout candle. Place stop loss above the recent swing high. Set take profit at 1 to 1.5 risk to reward. If the bars are white, don't trade. This means there's not enough momentum. In this example, price breaks below a support line. The squeeze momentum indicator shows red bars below zero. All conditions are met. We enter the trade. Stop loss goes above the swing high. Take profit is set at 1.5 times the stop loss. Result: the trade hits take profit and we bank a solid win. Now let's go through a few examples together and then I share the win rate I've achieved with you. So after backtesting this strategy on 100 trades, here are the results. 63 of those trades were winners and 37 ended in losses. That gives us a win rate of 63%, which is quite promising. So, now that I have taught you the rules, you should apply them to your chosen symbol and let me know the win rate you get in the comments. Remember, always manage your risk and capital if you want to be a profitable trader. If you found this video helpful, give it a thumbs up, subscribe for more strategies and tools. Thanks for watching. See you in the next one. Stay profitable.